My name's Sam Chadwick. I'm Director of Strategy and Innovation at Thomson Reuters. We are active in the financial services space. I myself am based in Zug, Switzerland, which you might know as being called Crypto Valley. At Thomson Reuters, we have just released the first market data oracle compatible with Corda and Ethereum, and I'm the product manager for that. But today is all about what are we going to make and what are we going to do to make this go mainstream. Is it even possible? And so I'm going to ask each of the panelists to first introduce themselves so you know who they are. I'll start with you, Adam.
Hi everyone, Adam Vaziri. I'm founder of Diacle. Diacle is a blockchain regulatory service provider. What we do, or have been doing for about 4 years, is taking mainstream ideas and building them on blockchain. So we got the first payment license for Bitcoin remittance service. And the latest project that I'm involved in is Quanta, which is a lottery built entirely on blockchain. And so I'm one of the directors of that as well.
Hi, my name is Adi Benari. I'm the founder and CEO of a company called Applied Blockchain. What we've been doing for the last 2.5 years is building solutions using blockchain technology for clients. We've got a team of 12 sitting in Canary Wharf in level 39. We've done, I'd say, about half our projects are for startups, half are for corporates. So we get quite a good view of an experience of what's going on across the industry.
Hi, my name is Marta Piekarska. I'm Director of Ecosystem for Hyperledger, which is the fastest growing project within Linux Foundation. We provide an open source ecosystem for developing open source frameworks that apply blockchain technology to basically anything that is not cryptocurrency oriented. We are like a membership-based organization that today has over 150 members, all the way from IBM, Intel, Deloitte, Accenture, Cisco, down to smaller startups.
Hi, my name is Ajit Tripathi. I'm a director in the fintech practice at PwC in London. I also co-lead our blockchain practice in the UK and been involved in a number of some pretty high-profile blockchain projects like the Bank of England DLT lab a year back, and then more recently with a consortium that we'll talk a bit more about. And my focus is on commercialization in a secure, safe, and regulatory compliant manner for enterprise projects.
Great, thank you everyone. So I thought for today we would discuss the drivers accelerating adoption, as well as the obstacles stopping it. So to start with, let's start with the obstacles. So Adam, in fact, I'm going to start with you, just because we had a question earlier, and sort of several earlier, around ICOs. Are they good? Are they bad? The impact of regulation. Should there be more regulation? On the flip side, you have in the US all of the money transmission licenses that need to be achieved in every state. So one might argue there's over-regulation. So under-regulation versus over-regulation, what is regulation, how's it impacting this space, and what's its role as an obstacle?
Well, the first thing is, ICO, from my point of view, is just a crowdfunding tool. Then you separate that from businesses that are relying on blockchain technology to run their business. So let's just separate the two. One is crowdfunding, one is running a business using blockchain. In respect to running a business using blockchain, so whether you're a payment service provider, or you're an exchange, or you're a lottery, or for any type of regulated service, whether you're using blockchain or not is almost irrelevant. You are regulated. And FinCEN has been very clear, so that's the Financial Crimes Network Authority in the US. Back in 2014, they said, if you're providing exchange services, then you need to register with FinCEN. We're capturing you within the definition of a money service business. And so, exchanges are already regulated, especially those that are providing services into the United States. In the EU, from the end of this year, all exchanges will be regulated under the fourth Anti-Money Laundering Directive. So there is already regulation that applies in this area to blockchain businesses. So businesses that are providing exchange service, payment service, or whatever. Now, on the ICO side, that to me is one of the biggest black holes at the moment of regulation. It's a Wild West, and a lot of people are doing ICOs with no regard to the consequences as founders in launching these projects. So for example, an ICO, you're receiving cryptocurrency and you're giving a cryptocurrency. That is a cryptocurrency exchange transaction. If you are selling tokens to US persons, that would be captured under FinCEN's requirement for MSB registration. If you haven't done that, then you're actually committing a criminal offense in the United States. So my concern is there are people that think that regulations don't apply in an area where they clearly do. It's the reason they have that naivety is because they haven't seen the consequences of regulations being enforced yet. And the point is that you don't see those consequences immediately. You see them, there's a lag time between an offense and the actual prosecution of that offense. So that, to me, is quite dangerous. It's dangerous for the ecosystem. And so what's needed, I mean, I try and set myself against the grain a little bit. Everyone's doing anonymous ICOs, and I'm like, well, forget that. You must be mad. Go and do it correctly. Go and get yourself registered. Speak to a regulator. Define your token under the law of that country and proceed in a manner that you could operate your business for the next 5 to 10 years without having to look over your shoulder every time you cross a border. So, I've started a trend. The Economist quoted it as the first compliant ICO, public ICO. We assisted with that. That took almost 2 years of negotiation with regulators to get to that position. And we've done significant ICOs with zero regulatory risk. So I just feel, that at the moment, let's say the people are not too concerned because they haven't seen the consequences, but because you haven't seen the consequences doesn't obviate the need for right action. So if you are concerned about those consequences, then do the right thing. And do the right thing not only for yourself as founders, but do the right thing for the ecosystem in general, because the crackdown is not going to affect you just as a founder, but it will affect everyone else that is wanting to enter into this field and every other project that has done funding through that mechanism.
Great, thanks. Ajit, what are your thoughts on regulation? I mean, I guess PwC is often involved in projects in the space, so what have you seen?
So let's look at regulation more broadly, right? So, I mean, the FCA just published a consultation on a discussion paper on distributed ledger technology and blockchain, and it closes on the 17th of this month. So they've been asking very, very pertinent and useful questions, and the overall tone of the paper is that while the regulators, especially the FCA, recognize the potential for innovation and do not want to regulate the space too quickly or too bluntly, if I may use the word, they're also aware of the potential concerns in the community. They're talking to everybody, right? But to regulate tokens per se too quickly or to be too harsh in applying regulations might stifle a space that has a lot of potential for innovation. While I agree with everything Adam said around making sure that the issuers are aware of existing rules and regulations, there are still app tokens, right, which are essentially rights which give consumers the right to access an application that's being built. And are they security or not? That's a legal topic that I will refrain from commenting on. So now, more broadly, there is, when we talk about the enterprise space, right? So for example, there is a consortium of 7 banks that's building digital trade chain, which is a trade finance platform for small and medium businesses. They are obviously looking across a swathe of regulations such as PSD2 and GDPR and everything else, and making sure that the platform, by the time it goes live, is compliant with all the applicable rules and regulations. So the regulators don't normally regulate technology. They regulate the outcomes and the businesses that they are actually governing, right? So if it's a financial service, then we have to be aware of what service it is and who are the consumers and what regulatory context it's operating in. But when we talk about cryptocurrency, regulators are aware of the risks from our conversations with regulators around the world, whether it's PBOC or the SEC or the FCA, but they are also conscious about not regulating this space too quickly or too harshly and thus stifling innovation in the process. Will things never go wrong? Absolutely they will go wrong, but there's definitely there is a balance there in terms of making sure that we do this right.
Great. So I don't want to make the whole session about regulation. So maybe we switch gears to one of the other topics that was covered this morning around cybersecurity. Right, so one of the obstacles that people have put forward to me, at least, is this whole space secure around the CDBC that we heard in the last panel session? What do you think, Ajit? Let's stay with you and then move on to Marta afterwards. But what do you think are the impacts of crypto security? Crypto security on the space.
I mean, so SWIFT just published a set of controls. Right, so some mandatory controls and some optional controls for all the banks that participate in the SWIFT network. So that use the SWIFT network for interbank payments. Now, I think we should all look at those controls very, very closely and recognize that irrespective of what the backbone is, right, whether the backbone is a messaging network or whether it's a blockchain, I mean, broadly, the amount of cybersecurity is a complex topic, and we emphasize controls as opposed to the technology per se. And we should all look at the controls that SWIFT has published based on their experience and make sure that whatever solutions we are building have the right controls in place, right? Now, there are but the technology does affect the nature of controls that need to be applied. For example, let's say Bitcoin blockchain. It's easy to breach the blockchain, as in everybody has access, so that it's not hidden behind a closed firewall of a bank. But at the same time, it's really hard to attack. You need to have 51% or at least 35% hash rate in the network. So the fact that it's a blockchain or it's a non-blockchain DLT in case of, let's say, Corda, changes how the controls need to be applied. Some controls are no longer required depending on the network design, and there might be additional controls that are required. But the point is that the fact that it's a blockchain doesn't take away the fact that you need to secure your endpoints, you need to keep your Bitcoins on hardware wallet, yeah? So, I mean, so cybersecurity, 80% of what we do today for networks like SWIFT doesn't go away. You still need to do that. The other 20% depends on the actual network. You know, Marta, I don't know if you have...
Yeah, great. Marta, can I move on to you? So Marta didn't mention, I think, at the opening that she's got a PhD in security. So is very well versed in this space, and we'd love to hear your opinion.
Well, I completely agree with you, Ajit. We quite often, during the hype, tend to think that whatever the hype is, it will solve all of our problems, and we forget that blockchain is just a tool, and as with any tool, we have to build solutions that are sound and secure on every endpoint. And the tool is great. I mean, blockchain is amazing for everything, but we have to have the regulators around it and all the solution around it. We have to have the endpoints that are secure. We have to have the cryptography right. And also what I am very aware of and sometimes concerned with is that quite often people say, well, I have this really interesting tool that is blockchain, but it's not really fitting what I want to do. It's not 100% what is my need. So I'm going to just tweak it just a bit. I'm going to change this one thing because the cryptography is a bit too hard and it's not running as fast on my device as I want to. So I'm going to just break it a bit. I'm going to change the cryptography to slightly weaker one and apply it. But then it's not as safe as it was supposed to be. But I'm going to promise that it will be as safe as it was supposed to be. So being aware of those consequences and not promising 100% security with 90% of implementation is something that is very important. And especially that when we give our customers or our clients just I use blockchain and then not tell them that we changed something about that blockchain is, I think, something quite important there. Also the problem of privacy and how blockchain technology impacts the privacy, and private blockchains or enterprise blockchains that give higher privacy promises versus public blockchain that exposes more of the privacy, but in the same time gives higher security assurances, is something that is worth exploring, I think.
Great, thanks. So, Adi, next question for you. So when we've just launched an incubator at Thomson Reuters, and so we have quite a few startups, blockchain-based startups, coming to us now and saying, we're going to kill the banks. That's our mission. Don't need banks anymore. They're gone. Now, I know a lot of projects that you do are involved with some of the major players and some of the smaller players as well. As far as sort of an obstacle to mass adoption, you know, I see banks as a channel, potentially, with millions of users, and it's a lot quicker to go that route than trying to build that yourself. But the trade-off between competition with incumbents and collaboration with them, what are your views on that topic?
I think it's very, very interesting right now because the technology is new, and so there's lots of people obviously trying different things. And I think there's a spectrum, and there's probably 3 points along that spectrum. On one side, you've got the banks and the corporates. On the other side, you've got these startups doing ICOs. And in the middle, you've got startups who are, I'd say, in the middle. So they're kind of playing it safe and looking to work with the corporates. And I think at the moment, most of those are kind of working in isolation. So the corporates, each corporate is starting off in its own house and saying, how can I benefit from this technology? Of course, because it's only going to invest in something that it sees as that will give it a competitive advantage and so on. And then obviously gradually this has started to play out into consortium. On the other side, you've got these ICOs, and if you read some of the papers, many of them assume that the corporates or businesses will somehow interact with these tokens. So you've got an ICO around insurance, or you've got an ICO around, I won't name them, but in their model, the only way that they get paid is through tokens. And they assume that businesses are going to pay with these tokens. But if this token can be traded on an exchange by anybody and used for money laundering, then how can a business interact with that? Right? The traditional bank is probably going to put a stop on that. So you've got to think through the whole end to end, and I think that hasn't really happened yet. I think you've got these pockets of activity that are sort of all going on really in isolation. You've got the startups in the middle, though. They're quite interesting because they started off, and this is some of the ones we work with. They started off in the private blockchain space. Because they said, well, first of all, we'll start off in a controlled consortium environment. And now I think a lot of the activity is being pulled into the public blockchain space because of the ICOs as well. But also the corporates are starting to move on. So we've got corporates that we're working with that are looking to put, we're working with them to actually put things into their production support environment. So things are moving forward, but it's still not clear how it's all going to meet.
I'll just say a couple of quick sentences. It's not unusual for a technology to start out being very disruptive and then find applications in mainstream industry or financial services. Right now, if you look at blockchain, last year the whole conversation was about financial services. This year we are being asked questions from every other industry. So we are working with so many other the old industry, and there is so much scope for efficiency. But on the topic of tokens, right? So I think that there's a lot of emotion around tokens. But what I would say is that right now institutional investors are starting to look at tokens. Right? Venture capitalists are raising token funds. So while, and until last year, blockchain startups were struggling to raise money because venture capitalists were saying, look, we burnt our hands with the Mt. Gox and everything else, and now we don't want to invest in a blockchain startup. So now the blockchain community has gone ahead and done its own thing. So now, this is truly disruptive. So now we're getting the mainstream investors coming to the token space, and at some point there'll be a bit more synthesis.
Also, just a point about collaboration. Yeah. I think collaboration is good, but a truly disruptive idea doesn't rely upon the legacy. That may be a little bit extremist as a point of view, but I would genuinely believe that if you're going to use blockchain, you've got to go completely all in. As far as you can remove yourself from the legacy systems, you're able to generate the benefits that actually blockchain, the promise of blockchain, in my opinion, which is more actually a RegTech promise. The notion of having transparency and auditability inherent in every transaction means that you don't have to have 30% of your operations staff doing compliance. And that's the real promise. But if you don't go completely all in to that technology and you just take a little bit of the fringe of that technology, I don't think you'll ever get those kind of benefits. And that's why for us, when we initiated Quanta as a lottery, it was like 95% of the whole business will operate on a public blockchain, which is completely radical and completely extreme. But the promise is our compliance team may amount to zero over the course of 5 years.
Marta.
Yeah, well, I absolutely agree with both of you, but I think that it's really important on the topic of collaboration and interoperability that we quite often today we are so embedded in the old style thinking still that we want to develop things in-house all the time, and we are so very protective of the IP and all of that stuff. And well, in Hyperledger, since we are a membership organization, we have all of those members, and as a director of ecosystem, I actively work with our members to kind of sit down with them and say, guys, what are your use cases? Let's try abstracting them. Let's try building something together, because we forget that blockchain is a peer-to-peer network. You have to have peers that work together. You can't have only, there's only so much fun that you can have as a single peer on a peer-to-peer network, right? So the collaboration aspect and kind of, in our case, we really believe in open source, because open source is something that gives you the promise of collaboration and continuity.
I think open source pre-blockchain took you to a very good place because you could say, okay, here's some code that's being produced, tested by the community, and so on. In blockchain, it's not just about the code; it's about the network. And so the fact that something that everybody can play around with the source code and potentially build their own networks is one thing, but the actual network that people want to connect to because everybody else is on, that's something else. That's a different level. And it's an extra dimension, if you like, that exists in the blockchain world that wasn't relevant before when you just talked about code and so on.
So we've spoken about a lot of the obstacles that face adoption here, right? Regulation, security, collaboration versus competition, right? Achieving that critical mass. If we flip to the other side of the question now, right? And I'll ask each panelist sort of in turn here, around the drivers of enabling this to achieve mass scale, right? What do you feel are the most important elements in the dynamic of the technology, the industry, the spaces that you're seeing? You don't need to go into use cases yet. I'll ask you about that afterwards. But if you think just technological or industry or business or regulation drivers, which ones do you feel, or where do you feel are the critical points? Ajay, I'll start with you and work this way.
So a customer, right? So I wouldn't care if, as a customer, I don't care if it's a bank. I don't care if it's a startup or it's a consulting company or whatever, right? I want a job done, as Peter Drucker used to say. So I have a problem, I want it solved. Now, who solves it? The best solution is the one I'm going to go with. So what we're seeing is that this technology is forcing institutions to collaborate to deliver solutions for the customer that they couldn't have delivered on their own. Right, that's the first driver, as in, let's say, a trade finance solution for small and medium businesses across Europe. That's one. The other massive benefit is in terms of eliminating reconciliation and reducing back office costs, as Adam pointed out. But that's less of a driver, in my view, than the ability to create new and exciting offerings for customers. And that's what we're going to see more and more in the public blockchain space, right? So I was at Money 2020 2 weeks ago, was it 2 or 3 weeks ago? And the question I asked is, if you already have an Ethereum address, do you really need a current account? Right? So I don't know. the answer to that is yes, you need a current account today, but will it be the same answer in 5 years? I don't know. So I think at the end of the day, we have to all think about what's the value for the customer, and that's what will drive the success of the technology. If the customer wants it, everybody else will come along.
I think the speed and pace at which things can happen also depends on the type of organization, and I think that you can't ignore that when you think about technology in general and how it evolves. So if you are a large bank or a large corporate, it's hard enough to make change. Then you think you have to do that together with your competitors and counterparts. How quickly can that really happen in terms of implementing meaningful change? And then you look at the startups and the disruption on the other side, who I'm struggling to keep up, and I'm in the middle of this industry. And so it's really moving very, very, very fast. So it's going to be very interesting just to watch how those two things evolve and what happens there. I think on the corporate side, it's really about protecting barriers to entry, really, and how easy will it be for these very fast movers to capitalize on the technology.
Agreed. Marta?
Well, I think incentivizing the governments to accept the solutions in some ways. So introducing blockchain technology based on insurance and global trade finance, all that stuff, and lowering the barrier to and collaboration, making sure that we all have common ground.
Okay. Adam?
Yeah, for me, I would say it is regulation, ultimately, because most of the applications that we're looking at are in regulated sectors. So, in my opinion, it's to find regulators that are willing to take on a disruptive idea, an extremely disruptive idea, and allow that idea to mature and to work with those startups. And I'm not talking necessarily about a sandbox. I mean actually formally giving approval to a business to operate, and that they can operate at scale if they need to. I think that's necessary, and to allow for that innovation to even grow. So to work with a regulator where you say, well, I want to create a new type of token that does X, Y, Z, and for them to say, okay, go ahead. We formally approve you to do this. Just don't rip off your customers, right? And it's that element of entering the mainstream, and that will take the blessing of regulators and the coordination between them and those disruptors.
Last question.
Just can I take a quick? So
Okay.
I personally feel that regulators aren't an obstruction at all. I think they're really supporting the blockchain ecosystem, especially the Dubai government or the FinTech Valley guys in India or the FCA in their sandbox. They've all been very supportive of a lot of blockchain innovation, and Bank of England with Ripple recently. So, as Adam, you said, the outcomes are important, and the customers and investors need to be protected.
I just want to be precise.
But they're not an obstacle.
Yeah, I'm not saying they're an obstacle. I'm saying that it's almost a standoffish approach. It's like to say, we won't intervene. It's a non-intervention approach, and that is presented as not being an obstacle. But my view is that actually doesn't give you much certainty. I think it gives you some certainty. It's better than nothing, let's put it that way. But what I'm talking about is literally formal approval, go ahead. That kind of approach, which gives the startup absolute legal certainty around what they are doing.
Yeah, if you're a startup, you can't have it both ways. Sorry, I don't mean to take the panel for the rest of this debate, but you want some uncertainty because that's the business you're in.
See, when we were
I'm already doing it with regulators.
when we were setting up this panel, when we were setting up this panel, I said it would be great if you guys don't agree because it makes it more interesting. But Julian is about to disagree with me, and so that might make it even more interesting if we all get hoiked off the stage. So let me finish with one just last question to each of the panelists again in turn. Your crystal ball in 3 years' time, which industry or domain or space or sector or geography will have seen the greatest level of adoption of something that has blockchain at the heart of it? Again, I'll start with Ajit at the end.
Absolutely, the government, as in building critical infrastructure that businesses can build on, right? So you've seen the example of Dubai. We'll see more and more of these come through. Then there's lots of great experimentation going on in the energy sector, supply chain tracking, trade finance, which is corporate banking. Securities and derivatives will come at the end because there's a really long reg roadmap that needs to be changed. and it's everything else is fair game, because ultimately, in any industry where you have a value chain that can be made more efficient, you have a blockchain play.
All right, great. Marta?
For me, actually, in 3 years' time, blockchain will be in the back end of basically anything. You won't see it, you won't notice it, but it will replace parts of and improve parts of whatever you use.
Do you think there's one space that'll move first?
Yeah, I think it will move to places like healthcare, like insurance and IoT.
Great. Okay. Adi?
Yeah, I mean, the places where we're being pulled into and it's moving the fastest is energy, mobility, transport, which we wouldn't have predicted before.
Yeah, indeed. Lastly, Adam.
Well, the thing is, I have an inherent belief that public blockchain is the only way forward. So I would love to see real applications on public blockchains that are really useful and that everyone needs. A lottery is an entertainment facility, but if you're just using a public blockchain for a global lottery, I would love to see that. I would love to see everything on a public blockchain, and I would love to see the people that are bringing that onto a public blockchain doing things compliantly. So from my point of view, my inherent belief is I've got to build the infrastructure to support those startups and even institutions so that they can feel confident that they can build on public blockchains.
All right, what a great note to end on. So with that, please join me in thanking the panelists today. Thank you very much for your time and attention, and most of us are around for the rest of the day if you have questions for us. Thank you.